10:30, we will start today's session. So if you know anyone, kindly reach out to the person to join as soon as possible. Yeah. Who else? Asamoah, what did you learn from last week? Basically, can you share with us not what I told you, but what you've learned from last week's session? Asamoah Prince Junior Bako.
Hi, Ebenezer.
Hi, how are you?
I'm okay. I hope you're doing well.
Fine, thank you.
Yeah. So, essentially, I think for me last week, I was able to identify some of the financial, policies or strategies that the hub needs to implement to be able to manage its financial matters successfully. I just wanted to add also, Ebenezer, like I told you in the other session, I was there, you know, provisionally, even though I'll be joining you every now and then. But then essentially now our finance associate is on the call currently, so should be
Okay,
taking part in the rest of the sessions.
that's beautiful. Can you introduce him? Who is that?
So she's Ikea Amor by name. She's actually on the call,
Okay,
so maybe you can prompt her to
okay,
introduce herself.
okay. I see a queer Amoa there. Okay. Okay. Kwame Otu, before 10 o'clock, can you share with us like what you learned from last week? So that at least Kwame, are you on the call? Emmanuel Mensah, can you share what you learned from last week?
Yeah. Hello?
Yes, please.
Hello?
Yes, we can hear you.
From last week, we learned about petty cash book, petty cash management, how to control our petty cash expenses and stuff. We also got to learn about procurement policies and how purchasing should be done. Thank you.
Okay, thank you very much. So we have 3 minutes away. And I mean, before time, if someone has something to share with us in addition, or I want personal lessons so that at least
Hi, Ebenezer.
Yes.
Yeah, please ask a question.
Okay.
You said you're sharing the hub needs assessment thing with us, but I don't know if...
Yeah. You should receive it by today. You should receive
Okay.
the form by today.
Okay, please. All right.
All right.
Thanks.
Okay. Okay, so in less than 2 minutes, we'll begin, but I just want to introduce today's session, and we'll be treating bookkeeping. Yes, basically entering records in your journal before it gets to your general ledger, before finally you prepare your financial report at the end of the month, or as and when required, whether monthly, quarterly, or annually. Yes. So I know most definitely we know bookkeeping, but we wouldn't spend much time on the theory aspects trying to define what bookkeeping is, and because even when we begin, we get to know that bookkeeping is da 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 da. They are all old practices, and now with a blend of accounting softwares and special treatment, things have improved. So today's session basically we will learn to understand bookkeeping very well, and the various items at the income statement and balance sheet. Then also we have a chain of activities that we will practice practically. Yeah, so I will share my screen. Today there is a quick template to guide our so can everyone see my screen, please?
Yes, please.
Okay. Okay. So today's bookkeeping. Okay. So as we already know what bookkeeping is, if I ask everyone give his or her own definition, but then some people think that bookkeeping is the same as accounting. There's sort of two schools of thought. That bookkeeping is just accounting. They assume that keeping a company's book and preparing the financial statement and tax report, these are all that we need, right? But then there are other accountants that object this and do not share the same sentiment that bookkeeping is all about record keeping. For those accountants, they think that bookkeeping has a limit, right? So when you record transactions in a journals or day books, then you post the amount in your ledgers. I assume everyone knows bookkeeping and ledgers and journals, please. Please, are we on the same page?
Some of us would not mind a quick run through on them. I don't know if I'm alone.
Okay. Who shares the same sentiment?
I do.
Okay.
Yes, please.
All right. So if we say journals, right, it's just like a book. I will always use the market women as an example. Every day they have their small book. A journal, just as the English name, is like a book that you record your transaction, your sales, your purchases, your cash, your expenses. So basically, if we say a journal, that's basically an accounting book, right? Yes. And ledger is a collective, it's like the mother book of, is the mother books of the sub books. So let's say you've entered your entries in your small notebooks, right? Then you transfer it to another bigger book, and that bigger book is called what? A ledger. Right? Generally, we have the general ledger, and that ledger is what consists of the various small books that you recorded. Let's say it's just like a summary, okay? A summary of the transaction that you recorded in your books or accounting books. So for instance, if in your accounting book, you recorded that you made purchases of this amount, this quantity at this time, when you get to your ledger, you wouldn't write all like detailed information. It'd just be maybe the account name and the balance at the end of the period. You get it? So the ledger is sort of a summary of everything you recorded in your single account books called journal. Is that okay, please?
Yes, please.
Okay. So bookkeeping is all about you recording everything and posting into your financial report. While some accountants disagree that this is bookkeeping, but they think that after posting everything in your day books or journals, then an accountant picks it and do the analysis of it. Yeah. But in our modern times, there are softwares that has come on kind of integrated the work of a bookkeeper and accountant. So now we have software that instead of you entering figures like in single units, whilst you are recording items in your sales journal, automatically it will reflect in your general journal, and then it will proceed to appear in your financial end of period financial report. So we have accounting software that are basically doing the same work for us. So all this we are saying are all old days bookkeeping practices. All these bookkeeping practices, you manually key in figures in your journal. Then let's say at the end of the period, you draw a trial balance. A trial balance, as you may know, helps us to identify errors and omissions. That's when we find out that a credit and debit side does not balance. We then prepare a trial balance to check out to see if there is an error. And today's bookkeeping basically involves the various accounting softwares. We have ERP Nest, we have SAP, we have Xero, we have Waiver, all of them. And one advantage about software is the fact that it helps you to eliminate errors, right? And also help you reduce the time you use in keying stuff. You know, with a manual way, you have to complete one, and then transfer it to another, then to another. But with accounting software, when you have the right command and you know how to use it very well and you key in the right figures, whilst you are doing this thing, simultaneously it's appearing in another books, and it makes work quite easy. Yes, but one also the disadvantage of account process, if I say steep, is not like easy to learn like you're operating your software WhatsApp app. First of all, you need to be abreast with all the details and features of your accounting software, where to enter this, which amount to enter at this place. That's when you'll be able to get all figures right. So one disadvantage of accounting software is if you don't know how to use it and you key figure at the wrong place, that's what it will work with. Right? So it might appear that at the end of the period, you're thinking that, oh, maybe by the end of this month, I'll just click a button and my whole income statement will be presented to me. Because maybe you didn't issue the right command, everything will be scattered and what you desire it wouldn't be as you want. So that's it about the disadvantage of accounting software. So the next phase, so accruals is the most preferred accounting method. We have the accrual and the cash method. If I say accrual method is the fact that when you end an event, it appears physically, like you have to enter the figures. Let's say, for example, let me use the example to clarify it well. So let's say you issued sales invoice of 100,000 Ghana cedis to a debtor, and the person is supposed to pay within 45 days. All right. With a cash method will say let the money comes in before you record it. But then what we usually practice, immediately you issue or someone bought something called the revenue amount of 1,000 Ghana cedis, then you have account receivable. Sorry, let me adjust. Sorry, let me a minute, please. Okay. So with the accrual method, immediately you obtain the sales figure, you write it down. So revenue will be 1,000 cedis. Then you record account receivable as also what? 1,000 Ghana cedis. That's the corresponding entry. You debit the receiver, which is the account receiver. Then you credit your revenue. You credit your revenue. Yes. Sorry for the hiccups. So that's the method for accrual. Instantly, when an event happens, you record it. So the accrual method is the most preferred by general accounting principle, and it gives a more realistic figures in reporting your company's assets, liabilities, and equity, and also gives a realistic account in reporting the company's revenue, expenditure, and income. Yes. So you wouldn't have to wait for cash to come in first before you record in your books. What if, let's say, some days to come you forget, right? So always we go by, hardly you even know that, hardly you even see that cash method is being taught. All what we practice daily is the accrual method. Please, if you have any question, you can ask immediately, okay? So with bookkeeping too, we have the double entry, which is for every double debit entry, there should be a corresponding credit entry. So basically involves two accounts. And with this example, we assume that hello? Hello? Please, can the person mute the mic? If it's not a question. Okay, so this transaction assume that we've paid for rent, right? So it means our cash will go away and we have the corresponding entry reflecting in our rent account. I use example because I'm sure most of us will have rent expense. If you are owning your own building, that's fine. But there's a clear example just to know some of the expenses that we incur in our various hubs. So the debit entry are almost always at the left side, and the credit entry is at the right side. So the example is as shown there. Okay, so I brought in the asset equals equity plus liability just to explain things ahead of time in our next slide. So we know assets are sort of the ownership, things owned by the company, and equity are money sort of to be shared with the investors or owners of the company, and liabilities are sort of losses such as debt and stuff. So asset is always equal to equity plus liability, and asset is at the left side and equity plus liability is on the right side. So I mentioned this just for you to have a, at this stage, we are trying to build the mental concepts so that when we do the practical, you get to understand certain terms. So with the various types of account, right, assets, which is found on the left side of the equation, at the normal stage has what? A debit entry. Liability has a credit entry. Equity, let me just go straight by mentioning equity too has a credit entry. Then revenue, someone might ask why revenue has this in the sense that revenue in a way also contributes to what? Equity. Because if you remember in the income statement, when you subtract expenditure from your revenue, you get your income. And the income figure is then transferred to the balance sheet as what? Retained earnings. And that also adds up to what? The equity. So it has the same treatment as equity. They are all what? Credit balances. Then operating expenditure also has nature as an asset. You say that expenditure in a way has a reverse effect on revenue, but then because operation expenses reduces revenue, it implies that when it increase, our equity will also reduce. The reason is, let's say you have revenue 10, then your expenditure is 2, you get your income as 8, right? Let's say in the next session, your expenditure increased to 4. It means your income reduced to what? 6. And you remember that we always add what? Our income to what? Our equity as retained earnings. So it means when expenditure increases, indirectly our what? Equity is also what? Reducing, right? So if equity has a credit what? Entry, it means expenditure will have the reverse entry, so that we wouldn't treat it as expenditure increases, equity to what? Increase. That's why that's why operating expenditure has what? A debit entry. So the same way, the non-operating revenues and gains, they are just like what? Revenue and expenditure. Just that the non-operating revenues, they are revenues that we earn out of our usual operations. So when we get along, you get to understand some of the examples of revenues that we get as a result of not our direct operation, not directly from our direct operations. Sorry. So the same applies to expenditure. So expenditure that we incur outside our what? Direct operation. So on a normal level, these are the entries, and as it increases to it just be the same. But then when, let's say, asset decreases, you have to credit it. Liability, when it decreases, you have to debit it because its corresponding entry is what? It's a credit entry. So below are some transactions that we could use. Let's say if a company pays $900 for current rent month, yeah, for rent. So in a way, rent account, if you have that mental visualization, it means rent account will receive, right? So we will debit our rent account with what? $900, and our cash will be losing cash. So we'll credit our cash account with what? The same amount, and that complies with the double entry principle. Debit the receiver and credit the giver. So the next example too is a company who performs what? Services for cash. So in a way, when we perform service, we will get in cash. So our cash account will increase. So when cash is received, we debit what? Cash. Then we will credit our revenue account. It with what? The same amount. If we borrow from a bank, in a way we will get what? We will get money, but then we will become what? A debtor to the bank. So then the credit, we will credit the liability loans what? Account, and that's what? A credit entry. So finally, if a company repays, let's say 4,000 on its lesson, we are paying back what? Our debt. It means our liabilities will decrease with this amount. So what? We debit it. In actual sense, liability should have what? A credit entry, but then because we are paying our loans, we have to what? Debit it. Then we have to credit our cash account. So these are some of the few examples. So as I mentioned from the start, the first entry is usually done in your journals. We have sales journals, purchases journals, and stuff. And after that, you summarize everything and transfer them to your your general ledger. So these technically, these are the items that a summary of all items that goes into the general ledger. We have our assets, we have our liability, stakeholders, equity, operating revenue, operating expenses, non-operating revenue, and non-operating expenditure. And the first three usually goes into the balance sheet. And the next two, which is the operating revenue and operating expenditure, goes inside our income statement. And also the non-operating revenues and the non-operating expenses also goes into our income statement. So you can have the mental picture of this. This is entirely the summary of items that will go into your final books of account, which is your income statement and balance sheet. We will get to study about the cash flow too later on. So when you pick assets, you get to know that all your cash entries, all your debtors, your land, equipment that you purchase, finally it will settle in your account statement, your balance sheet. And before we get there, I would like to also mention that balance sheets are sort of permanent account, right? And income statement, right? It's just for the period. The reason is whatever happens, let's say this month, right? You did an income statement for June, right? You still proceed to update your balance sheet. Income statement is just for this period. I don't know if I'm making myself clear. Is there any question on that? Hello?
No question from my end, please.
Okay. Anyone else too, or I can proceed? Okay, so you can have this mental picture of all things that we do. This is the 1, 2, 3, 4, 5, 6, 7 items that no matter which transaction that occur in your company, they will either fall in one of these categories. Okay. So then let's pick assets, right? So asset, these are the items that goes into your assets account. Your cash, your short-term investments, your debtors, allowances for doubtful debts, accrual revenues, prepaid expenses, your inventories, supplies, long-term investment, land building, equipment, vehicle, furniture, and all that, and accumulated depreciation. These are some of the items that goes into your asset account.
Hi, Ebenezer. Sorry.
Yes.
May I ask a question?
Sure.
This was a doubtful account. I'm not sure I've come across it before. The contra asset account.
So contract doubtful. Sorry, in a moment. So basically, they are allowances on your asset account, right? Let's say basically allowances that you earn on let's say an asset, right? It could be that someone rented your whichever you had, whether a car or a place or something, right? And there was this revenue or income on it, right? So it has this broad, it could be, but it's related to assets. Allowances that you earn from those assets are basically the allowances from doubtful account.
Okay.
Yeah.
All right. Thank you.
So okay, so I will continue. So these are some of the items that goes inside your asset account. Then we move on to the liability and equity account. So liability, we have what? Your short-term loans. You have your current portion of long-term. The current portion of long-term debt. Let's say you went to World Bank and you borrowed as much as 1 million, and they give you an interest, and you're required to pay it every year. Let's say 5% of that. So in a way, though it's a long-term loan, you get to pay it in bits year by year. So that one too, you had to account for it. And we have what account payables, your creditors, accrual expenses, on earned and deferred revenues. You also have your what installment. Okay, this is also what part of that. But the installment loans are more of a short-term medium. You have your mortgage loans too, that falls under your liability. Equity too, you have paid-in capital, common stock, paid-in capital in excess of the par value, and retained earnings. And as I mentioned, retained earnings came from your what? Income surplus. That's where your retained earnings come from. So these are the items that goes into your equity. Now we goes to, so basically these things, talking about your assets and your liability and equity, these are the items that goes into your what? Your balance sheet, right? So the next phase is what? Your income statement. Income statement, to get your revenue, whether you're providing products or services, you get your what? Your revenue from this. You can also get your revenue from fee that you earned as a result of maybe rendering a service or something to a client. And we have various and all sources of what? Revenues. Expenditure, to the cost of goods sold, the cost you incurred, and it will come from different product line. If I say product line, let's take for instance, Zineso, right? They have same company, but they produce different product that in a way compete with each other on the market. Right? You could hear that this same company have Pepsodent, and the same company produces what? Close up, and that there could be what? Different cost of goods sold. So you have to recognize all when you are inputting some of your what? Expenditure. Then we have salary. Salary too, when we get to payroll, we will get to go in depth about it. Salary expenses that you incurred every month. Fringe benefits such as payee, bonuses, allowances, etc. So that goes into your salary, expenditure, and fringe benefit. Then we have rent expenditure, all kinds of utility, lights, water, internet, what have you, all goes into this, and you have to recognize as such and put in your expenditure. We also have depreciation of your buildings and equipment, maintenance and repairs. That one to some of the expenses that we incurred and others. So with the non-operating revenues and gains, as I mentioned, let's say, for instance, you put your money in a bank and it earns some interest. It was outside your what? It's a revenue that you gain outside your normal operations. So as we all come on board, right? I'm not too sure whether our various hubs will open savings accounts, but usually you earn this from your savings account. But then when you have a current account, it's likely you incur charges, right? So interest earned from, let's say, cash deposited in your bank, that's where you gain some of this revenue. Then asset gains, let's say last year you bought car 9,000 Ghana cedis, and this year you sold it to someone at 10,000. There is this 1,000 gain, and that's treated as what? Operating revenue out of a what? Your asset. So sales of car higher than the book value. When you get to non-operating expenditure, interest expenditure, let's say you decided to borrow someone's money, and then you said at this end of the period, I'll give you this interest. You are giving that money away. You are making sales, and you decided to add a form of interest to your customers. In a way, you are losing, right? So these are some of the example of interest expenses. Then asset losses. Let's say last year, as you bought a car 9,000, instead of you selling it today at 10,000, maybe you couldn't get a buyer to buy it at that price, and you sold it at 8,000 or lesser. So in a way, you've lost, and this too affects your income. So now let me summarize how all these items will go in your income statement. So basically, you have your sales or service revenues. It comes first. Then after the total, you add other earnings such as the fee and others, right? Then you compile and accumulate all your operating expenditure. So cost of goods sold, you stated whether you have administrative expenses, fringe benefits, rent, all that. So you find the total, then you less it from your gross revenue. Mind you, revenue itself is not what you have, right? The income or the profit is what we want to arrive to finally. So when you subtract your expenditure from your revenue, that's when you get your net income. Then you could have corporate tax, you could have interest earned on that, asset gains, you add it to it, then you subtract your interest expenses and asset losses before you get your final income that you then transfer as retained earnings in your balance sheet. So that's the mental picture of how your final boost of accounts will look like. So as you start operating, you have to identify each transaction very well, because finally it will rest here in the income statement and the balance sheet. So anytime, let's say you're paying rent for a month, you have to note it very well. Anytime you're paying for utility, you have to keep records of that very well. Okay. So one thing that is also very, very important is bank reconciliation statement. In a way, it helps us to compare our bank balances and our cash book. So as I mentioned from the top, when let's say we pay for rent, right? We will credit our cash book because it's giving our money, and at the same our rent account will be debited, right? But let's suppose that you don't have cash at hand, but always you use your bank to make payment, to transfer. There will be discrepancies as a result of bank charges, or maybe you forgot to enter a figure here. But banks, maybe because they use software, and I assume that they always key in the right information. I mean, banks could also make mistakes, right? But it's likely we are more likely to make mistakes than the banks, although the vice versa also count. The reason why we are more likely to make mistakes is the fact that we always key in manually, and we are humans, right? So as you try to key in, maybe you might produce something lesser, right? And maybe whilst you're trying to prepare your trial balance, so you couldn't identify. I mean, you could try your best, trying to readjust adjust entries to find where the errors are, but still, if you can't identify, I think bank reconciliation statement is one of the things that when you perform continuously, as I mentioned, either at the beginning and or at the end of every week, it will help you to keep track of your finances, right? If you have the capacity, you can do it daily, and that would be the best. And with this, you can maybe assign it to one person if you're a team, that each morning before we start operation, please try and help us to reconcile our accounts with what our bank balances. But then if it has to be daily, it means that the rest of the team have also what updated their records, so that when one person picks, the person will be able to what reconcile and know what we have at hand, right? So bank reconciliation statement is also one of the statement that helps us to keep track of our money before the end of the month or the year. Okay. So then, considering the nature of what we do as Hub, it's more likely that we spend more than what we will earn revenue, because all of you, unless otherwise, right? In a way, we could provide services to other people. We could also, in a way, if we have makeup space department, they could create product and sell it out and what? And revenue for us, right? All same, there are important documents that we have to take note of, especially considering what purchases invoice, sales order, I mean, what you can see on my screen. And truth be told, all of us, we are more likely to spend more than what gain, let's say, at the end of the month, because of the kind of funding that we have at hand, right? So sales invoice, basically, we issue that to what our customer. In case someone comes in, wants your service, whether training or want to rent your space as a hub for 1 week or a month, in a way, you issue what a sales invoice to that person. So let me see whether I'll share a template with you. Sales invoice. I assume that everyone has a sales invoice. Okay, so sales invoice is very, very important for small businesses like us, right? When you go to larger corporations, they have specific, very complex accounting department that you can even have the whole department just handling accounts receivables or sales. That's when you find yourself in extremely large organization like multinationals, right? But then for small entities like ours, we should also make sure that sales invoice can be a first step to keep track of our sales, right? So some of the features that goes into our sales invoice, it is very important to get your addressing right, especially to the person like is going, and your address too. The reason is you don't know which organization you'll be dealing with next. I will always use the foreign missions as an example, and I think they are key examples for us to learn from them. Yeah. The reason is when you present an invoice and your addressing system, even your city, your number, your phone number, and all that are incorrect, it's very likely they will reject your sales invoice, right? Because what shows, and at the advent of this whole money laundering and globally, people are trying to fight terrorism and also money laundering, right? So if your sales invoice don't have what the right address system and even invoice number and dating, they can reject it. Let me share a practical experience with you with APSA. At a point in time, we wanted to pay a vendor outside Ghana. And usually you say that, oh, let me just walk into the bank, they'll do a straight advice, straight transfer for me, and that's it. they requested us to what? Get the invoice of the what? The service provider from what? Outside. It was as far as India. We have to reach out to them for them to prepare with all the information, address, whatsoever, communicating quantity, description, units, and sales tax, everything, right? So when you are preparing, unless you already have it, when you are preparing your sales invoice, make sure that at least you have your what? Your corporate logo on. You have your invoice number, right? Your date, company name, address, the person you are sending the invoice to. You have the right address system and all other information that you deem necessary for others to see that what this is an authentic sales invoice. In our part of the world, one challenge that we face is the fact that most of our suppliers are in the informal sector, right? So maybe you as an established organization, you might create a very nice sales invoice for yourself, but then getting to receive a purchase invoice from your suppliers, that's when the challenge is. But always I would advise that you insist that your suppliers, at least if you know that you're going to deal with this person for a long time, you can help the person that, to improve your business or to improve your marketability. I think if you have a receipt or what sales, an invoice, it will help. And this will even help you to have the confidence to apply for bigger projects, right? So basically, this is the template for sales invoice. You can design yours based on like the nature of your organization and how. So use this when you are selling to others or you're providing services to others. Okay, so sales, sales order usually they are brought in by what our customers. So when a customer wants to maybe get your products or your services, some of them can issue a sales invoice with the right quantity or duration they want to stay for your, if that's a service that they need from you. So your customers prepare that and present to you. The sales invoice is just to advise or to request payment from what your customer. So the difference is sales invoice is requesting what payment from your supplier, your customer, whereas the sales order is the customer trying to order something from you, basically. So the purchases invoice, that's one issued by what? Your supplier. They present this, you assess it. If you're okay with this, fine. So in the reverse, when you want to request to purchase something, you also write what? Purchase order. A purchase order, and that item will be delivered to you. So we have requisition form, payment voucher, expenditure report, and goods receipt note. I'll show you samples of that shortly. So let me show you a sample of a purchases. Yeah, so this is just a template of a purchases order. So it's always ideal that you have your corporate logo on your purchases order. You can design it, and it doesn't have to be as you are seeing now, right? It doesn't has to be as you're seeing now. You design it, but key information such as your company name, your logo, address, the vendor that you want to request item from, you have to get that too right. Then requisitioner, you can write the person's name. If you have detail of how the shipment should be, This is more technical, maybe when you are dealing with an overseas supplier, right? And if you also request them to ship to somewhere, you can also state there. But this one, for a start, I'm not too sure whether it will be relevant for now, but then as your organization, when you increase in operation and you feel like you deal with foreign partners, you can input that as well. Then basically your purchases order will have the item description, quantity that you want, the unit price and the total. Yes, then you apply your taxes and all that. Then you nicely endorse. And also entry that if you don't have a stamp, there could be an official corporate stamp that you have your hub name. Yes, that when you stamp, then the authorized person can sign. You could also have a stamp to acknowledge receipt. You could also have a stamp to notify that this amount has been paid. All these things, you can have them in your organization so that in a way, this will help you capture, it will help you capture everything and have records of them. So this is about the purchase order. So the purchases invoice usually will come from our suppliers. Yes, and one key thing that I would want to mention, let's assume you have your financial manual ready, right? You have procurement policies that will govern your purchases invoice. So in a sense where, as I mentioned earlier on, let's say when you want to purchase to up to 2,000 cedis, right? You don't require more suppliers, right? You can just source and get from just one supplier. If it is about 10,000 and you feel like you should get 3 or more, then you have to invite a lot of vendors or suppliers to submit their invoice, then you review it. So it's also important that at least you have the procurement policies there. If it is a public tender, it wouldn't just be an invoice. You could request them to submit a whole proposal, especially let's say you are in a construction company or you want to purchase generator or stationary items, or maybe you want some people invite cleaners, janitorial services, they do public tender to invite a lot of them. So it's a whole document that is separate. But that one is based on the internal policy, procurement policy of that. So maybe with you can start in a small way. If you know if for the next 3 months or up to the end of the year, you wouldn't make a huge purchase, you could just you could just invite just one person, then you review it. And also make sure, someone want to talk? Okay. So requisition form.
Sir.
Yes, please.
It's your voice. Can you amplify it a little?
Okay. Is it much better, please?
Yes, please.
Okay, thank you very much. So as I mentioned, with your purchasing invoice, you could have that policy that, let's say, up to this amount, you invite us. When it's a public tender, you invite them to present this whole document so that at least you keep track. In a way, as I mentioned, when external partners come in or auditors, they will ask you, what is your procurement policy, right? So if then they get to know that, oh, you don't have any policy, then they begin to think that, oh, there could be, I'm not saying there is, but there could be what fraudulent act going on. Yeah. You know, they could interpret it as, or you know someone that even if you have to buy this, you just go to the person straight. You get it? So you should have that policy, but that governs your what procurement. So I'll show you a bit about the requisition form also. So the requisition form, okay. So before we get to how do you call it, budget, I think budget is that tomorrow or the following day, right? Let me just introduce budget a bit, right? Let's say for the start of the year, from January to December, right? As you are an accountant or finance person, as I mentioned last time, you should try as much as possible to work closely with your directors. Even if they haven't called on you, you could suggest to them that, can we do this? That's a suggestion, not imposing, right? So you should first of all even think, before you even do this bookkeeping and final lesson, you should think of what? A yearly what? Budget. It could be semi-annual or what annual, but I don't think a budget, okay, if you have the capacity, you could project what a 2-year what budget plan. So you sit with them, then you allocate money for all your departments. If you have a lot of department like media, makerspace, software team, depending on your organization, you sit with them, they prepare a budget, right? Then you proceed. So that will sort of be the main budget for your company for what the whole year. Then you proceed to prepare what we have something that you could adapt, which is called implementation budget. It's sort of a budget out of the mother budget, right? So let's say you pull out the media session from the mother budget, then you now expand it, thinking alongside with, let's say, the media team, right? Because I mean, the truth is, in as much as you're a finance person, when it gets to the ground, they know best, right? Some of the machines, the name card, I'm not too sure until you have the visual representation, you get to see that. So you, with the implementation budget, you sit with them, then they break things down, right? Then out of which, when everything is finally approved by your directors, then you begin to what, spend from it. So out of which comes the what? The requisition. So let's say this is a sample, and as I mentioned, you can design it to fit your organization. Let's say you have your logo, whatever, it depends on who designed it. And it should also be in a format that you'll be able to what, print. Because after everything, you should either save as a PDF format or you should what, have a hard copy, install it in your file. So as I mentioned from the beginning, you should have what, a request ID for almost everyone. Because I mentioned that it looks like the nature of our work will be spending more than what we'll be earning by the close of, let's say, this month, right? So you create an ID for everyone, including yourself, except maybe a director or your directors who may not directly, I mean, it can happen, but rarely will you see a director requesting for this, right? So you create an ID for everyone. Then I deem this as the best practice. Let's say the media department, instead of everyone standing up to request for things anyhow, you, the accountant, you might get confused at a point in time. So you could also have this in your policy that all request or requisition has to come through from the department head, right? So let's say media department, instead of a single person standing up, right, to send you an email requesting for us to, let's say, pay for rent or purchase laptop or that, you could have that policy in your financial manual that, please, everyone goes through what your team lead. In a way, it will even save you the hassle of what reviewing, in the sense that you tax the team lead that before a requisition comes to me, please make sure you've what approve it. So at this bottom, you could say that Kofi Mensah, media person, right? Or I don't know how you the title you give to each person. So you say Kofi Mensah, then approved by, let's say, Oku, which is the team lead of this. It could be a project, right? When you have a project from somewhere, it could be that. So before it gets to you, this person has already what? The team lead has already approved that, oh, this is something our department what needs, right? Then maybe the department comes here, you write it, maybe software department. If it is a project, you could write maybe EU project. I'm sure you enact projects that it will have names. You could write it in place of that. Then if it is the main, so this technically, let's say this will be code cost main budget, right? The reason this is important is you, the accountant, right? So let's say in the main budget, right, the mother budget, the directors together with the accountant allocated, let's say, money for, let's say, laptops. Okay. Then I mentioned that, let's say, okay, fine. One, maybe HP laptop. Description, maybe you could tell more about the spec, 16 gig, 15 inch, etc. You describe it, quantity, they just requesting for one, and the estimated price, maybe 4,000. You give the amount. Then here will also help you to refer in your implementation budget where this item falls. So in a way, it will help you in reconciling the implementation budget and the main budget. So maybe it could be the name, the same name, right? Or it could be, okay, here, let me change it a bit and make it media equipment. And here, computers. You know, computers, we have desktop and what have you. Okay, computers and softwares. Right. So in the main budget, the name was what? Media equipment. When we expanded in the implementation budget, it fell under what? Computers and computer software. So in a way, when you pick laptop, or before, let's say the team lead send you this requisition form, you, the accountant, as you're about to review to disburse funds to the team lead or the person who requested for, you know that, oh, this is what within our budget, right? It helps you to stay within budget. It helps you to know that, oh, this is when we get to budget, we get to learn more about it. Like when you know you've exceeded your budget, how much left, you get to know all this. But the requisition form for a start helps you to what? Self-check your spending. Even before you reconcile, right? So it's all about checking. Requisition form will help you to what? Check it. Does it fall within budget range? If it doesn't fall, then maybe you require the person requesting for it to justify thoroughly. Then you could seek further approval from your authorities before you declare funds. So that's that about the requisition form. You could add more, design it the way you want, with your corporate logo on. But then key items such as the purpose, I think is also key. Purpose for the requisition. You can add that to something like the item description, quantity, and that you could also add that to. So payment voucher. Okay, fine. So let's assume this went through successfully. You went to seek further approval from your directors and it has been approved. You came back, then probably you shoot an email to the person who requested for it internally that this has been approved and this social amount has been disbursed to you either by bank transfer or what, by check, right? It's always advisable that before you do that, you invite the person to come in your office, or if it's a remote distance, you could also advise, I mean, we've already started the digital age. Try as much as possible to let at least all your employees to have an e-signature. Yeah. I know some of you already have, but those who don't have, it helps in remote remote work, right? Everyone should have e-signature. You could sign on a plain paper, you remove the background and you have your signature, so that at any point in time, you could paste and you still have it perfect as though you've signed your signature. But then the disadvantage may be, make sure that it's not at the disposal, like it's not accessible to anyone. Otherwise, it can be used against you. So if it will be done, you could also write policies on that maybe unless you are this kilometers far away from the premises, maybe you are required to use each signature. Unless maybe you are abroad and we still need you, you could use signature. It's all about what? Building that policy that governs your finance department. Until I always love issues, right? It's not like I love issues as in love issues, but the fact that issues, when it comes, that's when you get to know you have to toughen your policy, so have a perfect one. No one could ever have a perfect policy because at the point in time, it will even be outdated and you have to upgrade it. But then until you're faced with an issue, there you get to know that, hey, I have to be straight with this. Okay, so you could have a policy that also governs. So back to this, let's assume everything has been successful. You invite a person, then you make the person feel what? A payment voucher. I'm sure like some of you have it. Let me show a sample of a payment voucher. Okay, so this could be, I don't know why I like using code codes for today. Okay, so this could be a payment voucher. You state the voucher number, the date, payment method. Did you give the person physical cash, right? And remember, this also helps you in your bookkeeping entries, because let's say you are now preparing like to compile all these things, right? You might have forgotten something, but then you realize that, oh, okay, you issue this with check or cash or either online bank transfer. So you state the payment method, cash, check, then you write the check number. Is it online transfer? Yes. You could also add Momo option, or you could integrate it as also online transfer. But then as I mentioned, based on the needs of your organization, you could have designed it the way it will fit perfectly. But items such as the voucher number, the date, the method of payment, the description and the amount, that's when maybe you dealt in a transaction that had foreign currency, right? You could write who authorized this payment, right? Amount in words, the payee. The payee usually is the vendor. And it's always advisable to have the payee as always a corporate entity, right? The best practice is to have, we should try as much as possible to giving money to individuals, right? But then the individual can come into to receive the money and sign against. But again, you, the accountant, you have to make sure that before it approve and authorize that. So before you even give this money out, make sure that the employer, your co-worker who requested, right, has completed. Your co-worker will complete this. That's when you give him physical money to buy things from the market. You get it? We'll get there with the expenditure report. You understand shortly. But then when you pay your suppliers or your vendors, make sure they complete a payment voucher to avoid any future issue that may arise. Okay. Which document so with the expenditure report, so let's assume this. The leader requested something on behalf of a worker. Then you give her the money, but then because some of the things, they have to get it somewhere at Mokola, or I'm using here because I'm in Accra, Mokola, or if you find yourself in Kumasi Market or something. This one, you didn't pay directly into the vendor or supplier's account, right? Then you give the money physically to your coworker to go to the market. Last time I mentioned that if you fail to work with principal and you think that this is my friend, this is that, you have this strat. One day, I'm not saying it should happen, but it will come back and bite you. So when you give money out, you make sure the person, your coworker, fills out the payment voucher. Then after everything, he or she should come and account to you using the expenditure report. So let me use this as an example. You can design it to fit the way you want. So you gave her money, let's say at the start of the period, you gave 5,000. Hey, you requested for a lot of items and I've given you this. You've completed this. Obviously, the person went to the market and will have to roam shop by shop on these retail shops. We don't know them. One thing to please, before you start everything, try and have a vendor list. Try, like, you can have keep adding. In a way, it helps you even build your relationship with them. Build a vendor list. You can also build a customer list, right? Showing the items that they supply, the amount, their preferred means of payment, right? You ask them. Even from time to time, you in a way you just call them asking just to check up on them. Then you, through that, you ask them, oh, this item, is the price the same or has it been increased? Something like that. In a way, they will also have you in mind. And as you buy from them, they will be eager to respond to you as soon as possible when you need them, especially when you have to make emergency purchase. So you have a database of them. Periodically, you could send these holiday greetings to them, season greetings. You could send to them, and it helps you also build a perfect relationship with them. So when your coworker goes to the market, you could tell them to get their contact, right? You tell them to get their contact and build that database so that the next time you know that, oh, you want to save your friend from this wahala. The fact that maybe it will occur that, oh, when he was going, the money got lost, or he was robbed, or that kind of story, right? In a way, it helps you save that person too from that issue should it happen. Okay, so that you build a database. So next time you reach out to the person directly and request for their bank statement, and that you make payment straight to that. Even save time and effort. So let's say this person went to town, bought this, and make sure they always get receipt at all time. There's the item that they purchase, the unit price, quantity, amount. You could also refer. Initially, maybe they said the amount is 5,000, but when they went to the market, it was lesser. You get it? All this thing, it helps you in your analysis, your budget analysis, right? So you track all this, then you state that, oh, this will be prepared by the worker, right? So let's say I received this amount from what? The account person, and after everything, he was able to return this. Prepared by this person, and you, the accountant, would then have to clear the person. Right? It's always important because in a corporate setting, when issue come, you would now understand that, hey, your friends are few. So always remember to go by principle. Let's go about this. When we, after work or break time, we could be friends. Although, I mean, we are friends all the time, but you should have that clear distinction. So that is it about the expenditure report. Then let's assume the person purchased what? Laptop. You could also keep track of what? All your assets, right? It even help you to know, to get information for your assets in your balance sheet. These are some of the small petty things that will degenerate into your income statement or your balance sheet or cash flow statement, right? So boost receipt notes. Let me show an example. And as I said, you could what? Design it to fit your internal policy, but it should have keynote based on your research, based on your discussion with your directors. They could tell you that, oh, okay, when this person purchases this and brings in within, right? State the supplier's name, the order number. That's when, if you're able to have that vendor list, and you could what? Issue what a purchase order, right? You could provide your what? The purchase order, the date, delivery, where it was delivered. Was it at your premises, or they said send you to your director's house? You should state it specifically, right? You can add more to it. You can try to be as straight as you can, but at the same time remain what? Flexible, right? So the goods that they bought, let's say HP, you have to be specific with the goods. HP, game, something. You could write the specification, 15 gig at, let's say 5,000. How many quantity did we ordered. Maybe we ordered one, and that's when here comes in. That's when what you have issued what a purchases order, right? You ordered maybe one came. Anyway, it helps you to what, keep track of what you are buying. And at the end of the period, you can refer your asset list from this, right? And in a way, it can even help you to what, reconcile statement with this, because at a point in time you might buy things with the physical money, or sorry, my line went off. My internet, okay. Let me share my screen once again. Okay. Yes. So with all this, when you open your, let's say you create getting to the close of the month, expenditure report, and let's say as at May ending 2020, you state your all the expenditure. You could create expenditure, right? Then you list them: laptop, signage. Okay, let's say business cards, cameras, etc. Even you could utility or rent. You could write, okay, this is the subject of that. You could go further to state what? The same unit. That would be a detailed what? Expenditure. The units, the amount. You could mention the vendor reference. Receipt is very important at all times to have the receipt. So receipt number. It could be a policy in your destination that, hey, you requesting for this. If you don't bring receipt, or if you don't tell your vendor to bring receipt, I'm not giving you this or that. In a way, it's not to create an very hostile environment, but then it's a work. You know, the time when auditors come in and they start querying you here and there, that's when you realize that it's important to at least some, as I mentioned, when they visit the informal sector, there could be advices to them. You could, it's not like a coercion, but in a friendly manner, convince them that, oh, we are this lucrative, right? Lucrative organization that we like to purchase from you always, and we give you money. But then this kind of documentation is very, very important to us. So to have our constant flow, like to get money from us always, please have invoices. I'm sure when you visit the stationery, when they visit a business center or a printing press, they will be able to design something for them. So you can also add that in your conversation to anytime they go out there to purchase. So you list all of them down like that. If it is revenue that comes in, then you state it accordingly. Let's say revenue. Our last session is specifically on financial reporting. So at that time, we would have studied budgeting and payroll and all that stuff. So then I'll design a practical lesson for us to key in figures and prepare a financial just for this training. If it is revenue, you state revenue. And as I mentioned, you could be a complex accounting department with so many colleagues who works on different things. So then as the accounting lead, you could create a format for them. And let's all use this template. And surprisingly, you could also even let them write specific email subjects for reporting, right? So as a team, you agree that, let's say by the end of the month, when you are sending your report, it should be specifically, let's say May report is to, maybe the person is working on with media, the media will continue. Then maybe today's date follows. Maybe the next person will be working on a project with EU. So maybe it will start May report, EU project. That in a way, it makes things simple for what you guys, right? So and try as much as possible to have either weekly meetings, right? It should be a tradition that maybe within that meeting, that's when the person will come and report to you the reconciliation that he did with the bank statement. Either twice or once a week, there should be weekly meetings stakeholder by the finance team. It could be, I mean, you could at a point in time even invite your directors or whosoever you think will have to sit in the meeting. But then when you have that constant and regular meetings, in a way, if it is a team, you get to know what one is doing, the challenge one is facing, how you could help each other, how the roles that you assign to each other, the person, whether the person is able to handle it well or not, or that you get to know in your regular just finance team meetings. Okay, and it helps you keep track of, every opportunity and what issues before the time even arrive. Okay, so okay, now I'll make room for questions. If you have a question, please feel free to voice it out. And I would like to say that please endeavor to come on time so that at least exactly 10 a.m. we start. I beseech everyone to do that, please. I think today we were late. We started the session at 10:30 instead of 10 itself. So please try, when it's getting to 10, you get you just set up and we begin our classes as soon as possible. Please, any question?
Hi, Ebenezer.
Yes, please.
Can you go over the expenditure reports? I didn't get how you record it. You do the recordings on the expenditure report.
The one is it this one or the one?
No, not this one.
Okay, I'm coming.
One with actual cost and budgeted cost.
Okay, So expenditure report. Okay, so let's assume that you're giving money physically to your friend. I won't say even your enemy, your friend, right? The reason is you give out to the person because so you give out the money physically to your friend, right? But then I mentioned last time that you should also think of your friend, if indeed that person is your friend, by just creating this template or principle that you guys will work with. Otherwise, that time will come, something will happen and it will destroy your friendship because of money. It could be as little as even 1 cedi, right? So ideally, we pay money directly, we accountants, we pay money directly into vendors' account straight. Like, even if it is the director, we wouldn't like to, transfer the money into the person's personal account, right? We send it directly into the bank account. Right? But here lies the case, we've realized that we don't know, let's assume we haven't built our vendor list. We don't know where to purchase. We don't know anyone. But then this media person came to you that, oh, I know someone at, and mind you, in as much as we are giving our money, we accountants want to buy things at a lesser price. So let's assume your friend came in and said, oh, I know someone at magazine or Mokla market who says this perfect brand at a cheaper price. We don't know this person. So what you do is you give the money physically to your friend to go there to purchase it, right? After everything, especially when it's a long list, right? Maybe the person went to buy battery. These are all, media equipment. Battery grade, card reader, EC batteries, chargers, mic cap, double straps, what have you, all of them, right? The person did it informally. Now, you can't just, like, the person just can't walk in and say, this is the change, right? This is the items that I bought. No, there should be a record for it. First item, receipt number. Although you have receipts, but let the person fill this receipt number, purchase the item that he purchased, unit price. This unit price is the price he got at the market, right? The difference between budgeted and the amount is, before the person is going, maybe he told you that we sell the camera at 700 cedis. But then when he got to the market, he got the same thing, the same brand, features and everything for what? Let's say unit price at 600 cedis. Right? You the accountant have to know. Fine, the person can tell you verbally that I bought it at this price and that. And then you should have a record for it. So basically that's that. Okay, so the amount received section, this is when the person was going to the market. Let's say 5,000 was given, right? So after spending on this sheet, you could see that the person spent only what? 1,000 what? 1,640. And maybe you gave the person this, right? So the amount that the person is supposed to return should be what? The 5,000 you gave out and what the person spent. And the person is supposed to return what? This. Then you put this back into your what? Your safe, your money safe. I'm sure like You should also plan to get your money safe at your offices. Or if you know how to keep your money safe, that's fine. But try in as much to also get safe there to keep physical money. And you could just let one finance person operate, or maybe in the absence of that person, there could be a way in a lay down procedure as to how who have access to the safe and at what point in time can the person open. There should be a policy like that. Right? Not leaving any things to chances. Yeah, and the prepared by is your friend who went to the market. Right? You should be specific with which department the person is. And you as the accountant should clear the person. That's when you are satisfied that everything here is what? It's okay, and now you can move on. Please, am I able to answer your question?
Yeah, but when you say prepared by, doesn't mean that the person who collected the money is the one who prepared the whole expenditure
Yes.
report. Because I've
Yes.
seen prepared by.
Pardon, please. Yes,
So
is the one.
the person who is supposed to.
Yeah, is the person whom you give the money to. He or she is the one supposed to prepare this.
Okay.
The reason is you have no idea all these items, right?
Hello.
Hi.
Hello. This
Hi.
coming
Okay.
even just let them know that the account, this is the template you give to the person who went to or purchase the thing.
Okay.
It's not create all this, but the accountant will give, the accountant, the finance person is the one to give he or she this form to fill.
Okay. 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 So as you rightly said, this is a template and the accountant gives to the, I now understand the meaning of prepare. It's not as in the person who prepared the template. No, it's the accounts team that prepares this and gives to the person who made the purchase. Do you get it? That's why they said this was prepared by, or you could say, you could name, instead of prepared by, you could find a synonym to, in a way, communicate how you want it to be communicated, basically. Okay. So you could say this form filled by. Hello?
Yeah. Okay. Thank you very much.
Yeah, you are welcome. But this template will be prepared by the department. Okay.
Hello.
Hi.
Since there are no questions, may I ask, or how many of you have such templates at your end, or using something similar?
I'm on.
We don't have. And even that was what I was. Hello.
Yes, yes, you listen. Yeah.
That's what I was about to ask, whether it will be given to us so that more as we practice, we become used to it.
Okay. Is that all right?
Yes, please. And moreover, I also see the account officer as a storekeeper itself and procurement officer if we are following this procedure.
So we think for now, if you don't have a procurement person, this will also be a template to use. But whichever case it is, this is the fundamental template to use to build up. Also, you're also going to use as a bookkeeping records.
Okay.
Yes. So as I mentioned, I mean, for for a start, as a small business, you might not have that complex department who handles procurement separately, right? If you have that department, I mean, the person can handle all this when goods are coming, even where to store. You could have the store department who will even handle goods receipt note. You get it? But here, I think the accountants who handle this because in a way it's related to money that they gave out. Yeah.
Okay. Imano Mensah. Hello, Imano Mensah.
Yes, please.
Sorry, which hub again?
Kumasi Hive.
Oh, Kumasi. Okay, so you guys already have such templates, right?
Yeah, we do.
Okay, thank you. Ekia Asamoah. Hello, Ekia. Your mic is mute.
Hello, I'm here.
Okay. Which hub, please?
Hello.
Hi, Ekia. Good morning. Good afternoon. Sorry.
Hello.
Hi.
Yeah. Good afternoon.
Please, do you guys have this template already?
Hello. Hello.
Okay, do you have this template?
No, please.
Okay.
Okay, thank you.
Yeah.
Epsiba, I code.
Yeah. Yeah. We don't have
Please.
this template.
Okay. Janet, grassroots.
Hello,
Hi.
good afternoon. Yeah, we do not have it.
Okay. Ekia and Janet, please mute your mic for us. Rufina. Hello, Rufina Honod. Hello, Rufina. Okay. Victoria, DIV. Let's see. Sandra. Hello, Sandra. Hello, Victoria. Hello, Rufina. Your mics are mute, so you can unmute it and speak for us, please, respectively. Hello, Sandra.
Hello.
Hi. Please, do you have this template?
No, please.
Which hub again, please, Sandra?
Easton.
Eastern. Okay.
Yeah.
Thank you. Victoria.
Yeah, hi. We don't have everything. We only have the payment voucher and sales invoice.
Okay, that's fine. Rufina.
Yeah. Yes, please. Oops.
Take over, please.
Okay, so I think we have. I just wanted to I want to ask if you have more questions on. But please be informed that tomorrow we will have budget, retreat budget. So we will get to understand budgeting very well and even have to request your department to present budget to you, right? So I will Oops. Please, can the person mute their microphone? Is this Sandra? Or okay. Yeah. So tomorrow we will have a session on budgeting, and we will get to understand the in-depth of it with regards to the corporate budget itself and the departmental budget, and how to analyze the budget so that you won't overspend or always have red. It's a healthy practice, financial practice, if you stay within your budget. I mean, you're the finance person, you tend to, get favor or tend to be liked by your directors if you help them, because it's like they've entrusted everything in your hands, right? So tomorrow you get to study about budget. So as usual, who can volunteer to present a template that we can work with? I don't want to present, I want it to be practical so that before tomorrow we will share, let's say, a template, already prepared budget, a raw data, right? So that tomorrow we can all, practically be involved in that, in the calculation. Yeah, just basically just that. Is someone having an existing like budget with figures in? Okay, let me see by hands those who work with budget, like those who have budget for this year. I want to see by hands, please. Please, anyone with who works with budget?
Hello. You can check by the participant side. Raise your hand.
Yes, you can. I'm sure. How do you even raise your hand? Okay, okay. Daniel's hands is up, but I want to see who works with budget.
If you're using a phone, you will see by the 3 dots on the right side below. If you click on it, you're able to see raise your hand. If you are using your laptop, whatsoever, if you click on the participant and you come down, you see invite, mute me, then raise your hand. Okay, Emmanuel's hand is up. Hello.
Okay, I could see Emmanuel.
Oh, please, let's enjoy participation. Eben, the question again, please.
I want to see by hands those who work with budget, either semi-annual or annual budget.
Victoria, Sandra, Janet, Heffy. Okay, I've seen Ato's hand, code closed. So those that their hands are not raised, it means that you are not working with budgets, right? Okay, thank you.
Okay, and with those that have their hands up, how will you rate from 1 to 5 the effectiveness of your budget towards achieving your corporate target, how will you rate it from 1 to 5? Code codes, can you yes, can you tell me your rate from 1 to 5? Okay, Emmanuel.
Okay, I'll say I'll rate it at 4.
You rate it at 4, almost
Yeah.
perfect.
Yeah.
Okay, all right, sure. Code codes.
Four.
You also rate it 4.
Oh yeah, we are doing well with it.
Okay. So tomorrow we will add variance analysis to it. We also input formulas such as VLOOKUP formula in Excel, just to help you know which percentage of your budget have you spent, which percentage is left. We also use color code to indicate when you know, Charlie, when it turns red, it means you're overspending. You could, we also talk a bit about policies that could go into your budget, as in which percentage is allowable that we can overspend, right? You could say, let's say when you assign 10,000 for the media team, you could allow on an extreme condition that if it gets to that level, maybe you could only spend below 20%. So if it goes beyond 20% of already amount which has been assigned, means it's getting to the red zone. So we'll get to compute that and build that perfect analysis so that, okay, here's what I'll do. I want it to be more practical. So before tomorrow, 10 a.m., I'll share a template with you with figures in already, right? Then we will work with it. Okay, I'll just stay there, budgeted, and the actuals we will create it by ourselves collectively. Okay.
Hello. Yeah, just an adult. Please,
Okay.
you can also rate the facilitator. And also, if you have comments or feedback, you can also either write it in the chat box or send an email to it for us. We want to build up every day with respect to the feedback you give us. And also,
Yes.
by Wednesday, a Google form sheet will be sent to you for you to access the facilitators and also your point of view with respect to the impact, or if it's been helpful to you or not. Let us know. Thank you. Please take over, please.
Okay. Please. Okay, so about requisition, invoices, review and approval, payment voucher, expenditure report, goods receipt report, records in various. So then, when you get all this thing right, it helps you to keep records of your cash, right? So at the end of the period, when you are entering, let's say your cash flows, right? You get to know that this amount went into petty cash. This amount went into the what? The media team. This amount went into the creative space team, right? And you'll be able to use that to reconcile your bank balances and also in preparing your income statement. So when we go back to, what we learned from the start, you know where your cash totals will go to in your balance sheet. In regards to your sales and revenue, you know where it goes to. And then I can say for a fact that we'll tend to have more expenditure, right? So make sure that when we get to salary, we also get to treat the various items that goes into salary in regards to fringe benefits, paying SNAIT, and tier 2, that's pension, that's the statutory requirement, SNAIT and pen trust, yes. So all this, you have to account for it. And also your bank charges too, you have to account for it. Sometimes we overlook until you do your balance sheet. That's where you get to know that, oh, you might think that you have this amount sitting in your account, but then before you realize it has been reduced by transfer charges and stuff. So it's something that you have to also take note. And I'm sure a lot of you already have bank account. How many haven't opened, aside, let's say, the ABSA account that GTL required you to open? Was it the first, please? So please, how many don't have bank account and mobile money account? Okay, let's talk about mobile money. Okay, so I assume everyone has a corporate mobile money and corporate account. So I think I'll share with you templates. You could also design template that you use it to communicate with the banks. In terms when the director wants to transfer funds to a party, there could be a letter in writing. And then you should try and have a corporate. Code, please, can you mute your mic?
Sir, please.
Or unless you have
your voice.
Unless you have.
Please amplify your voice.
You can't.
Yeah.
Oh, you can't hear me?
Yes, amplify your voice, please.
Okay. Can you hear me now? Okay, thank you. So you could also have a letterhead and a standard template that you use to communicate with your banks, right? Depending on the account that you've opened with them and the services that comes with it. Some will require that just an email should be sent to them. Some will also require that there should be this corporate letter from your organization to communicate with them. So if you don't have a letterhead, you should also create one purposely to communicate like officially with your banks in terms of you wanting to transfer money to external partners. So that's one thing too. You could build a relationship with your banks. Also, you could request one accountant to be the person and every month will reach out to the bank to get the statement. Yeah, it could be a standard practice. If it is every Wednesday of the first week of the month, it could be that. If it is every Friday, you define it according to your policy. So that's one thing too. And about your mobile money account, you could have that to support your transfer, because there could be times when there are delays when you want to transfer petty amount. Sometimes it's not all that necessary to incur bank charges transferring as small as let's say 100 cedis or 200 cedis. The mobile money accounts could cater for that, to disburse funds to your respective recipient. So you could also factor in that. Yes. I need more questions. Other than that, we could end today's session. It's already 30 minutes past. Please, anyone with a question?
No question from my end.
Okay.
Eben,
Yes, please.
is it possible to share the template for them today?
With all that, yes, it's possible. With all that we've talked about today.
Yeah, or you do it at the end of the class, like on Thursday.
Okay, I'll do it end of today. But then what I would advise is, this is just a template. So you could borrow ideas from and create it the way you want it, even with the whole presentation, the whole display. When I share with you, everyone should have its own, display and how the person wants it to be. Okay.
Okay, that's fine.
Okay. So it can be done today. I will share by close of business today.
Okay.
Okay. Marvel, if I got the name right.
Marvel's an observer today.
Okay, all right, sure. All right, sure.
But in subsequent meetings, we'll be talking. He's the one to handle the taxation and compliance.
Okay. All right. Sandra. Do you have anything to say? Okay, I can't hear you, so maybe I'll move on to Janet. 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 Okay, Victoria.
Yes, please.
Do you have anything to say, please?
Hello?
Yes, do you have anything to say?
Hello?
Do you have anything to say?
No, please. No, nothing for now.
Okay. Cocos, please, do you have any question?
No place. But one thing I can say, I believe as we put it into practice, there we can progress better.
Yes, when you put it into practice, there's this implementation plan that will have for you. So at the end of this training, it's not the end of it all. I'll still keep track of your progress and your performance just to know if you are okay with
So you'll be a standby for us. English, we can let you.
that. Absolutely. But then today's assignment basically will be to share the template with you. Then you develop yours, right? With your logos and other pertinent information that you need, let's say outsiders or your employees to know. Right? So that's today's assignment. When hopefully you get to receive the needs assessment.
Sorry, please, your voice.
Can you hear me?
Yes. Increase your volume a little for ourselves.
I don't know, but okay. Is it better?
Yeah.
Okay, so I'm saying that today's assignment, right, basically to develop your own template. So I will share the various templates with you. Then based on that, you used to develop yours. Was I loud enough, please? Hello? Hello?
Okay, Evan, please do wrap up.
Okay, so thank you very much for today's session and your attention. So probably tomorrow we'll work on budgeting. Okay, so kindly prepare yourself and please come early, exactly 10 a.m. Then we kick off so that we can close at exactly 12 p.m. Okay. Thank you very much for your time.
You are welcome.
Thank you too.
Okay. All right.
Hello.
Hello?
Hello, dear. Hello, dear. How you doing, dear? Hello.
How may you help?
Hello. Can we leave the meeting?
Hello. Hi.
No, the computer. Okay.
Okay, that's fine. Picture of, but it shouldn't be like it should be indirect or informal, like, oh, you're taking a picture with the team. You get it? No, it's not necessary though, but then you should just take it like, oh, we are building the team, so let's take a group picture or something. What I say? Yeah. Okay. Yeah, if it's not obligatory, but then if the means of it, you need to do a consent form, and that's a different matter. But I'm saying Yeah, that's so it's consent. They need to see consent from the people. Yeah. Actually, Rebecca said they took my picture without knowing. Yeah. Okay. Yeah, that's fine. Oh, okay, that's fine. Oh, that's fine. How many days are they doing it? Okay. How many people? That's fine. And what's the target for the day? To meet 30 people. Oh, okay. No, it's more than that. If a day, if there are 4, right? They are 30. One thing, and I did for 3 days. Okay, okay, that's fine. Uh, but are they meeting but at the end of the day or what? Okay, so what time are they picking up their lunch? And so yeah, so don't provide their lunch for them. Make it money for them because we don't know if you go and give them food and something happen. See, man. No, so it means that what you do is that you mostly if you pay them at the end of the session, whatever they've done for the 3 days. So then they take it. So they know that on the third day they are taking 300 cities from you, or they're taking 100 cities from you. Oh, for one person. Yeah, 100 cities plus for them. Yeah. So tell them. No. It will be. I don't know, put it like it won't be significant. It wouldn't be significant. Like I give me 10 cities, 20 cities a day. It could look somewhere. You have. Yeah. Yeah, that's fine. Yeah. Sure, yeah. Take care. Yeah. Okay. Okay. Or okay, that's fine. Okay, that's fine. Yeah. Yeah, I'll come by. Sorry, when you go for lunch? No, go lunch. You go talk. Don't have to come back here. No. Why you hold? Then what you go? You know what? You tried the banku.
No, thank you.
To what?
What is?
Today?
No, you won't do banku this heavy morning.
Baby, the days never change.
What you choose? You don't choose again.
I will choose, but I don't know. That means it's delivered what? Right? And one rice. Snap.
There be virus in it, but as my 5 year me,
Yeah, the price, please.
yeah, class be online. You're gonna happen.
Melina, why are you there? Are you at me? Please take my food for me. I took only and don't buy it. Money is what you. If they don't give it to you, they shouldn't bring it.
What did you say comes in? When you go to take my I think you can make anything do good, but take when you see. There are certain who don't take up. Thank you. Wow.
Come here. Okay.
Depends on where.
My time is over. Hey, what's yours? Oh.